Hi, everybody. It's Sharon here. I'm with Brent from Silverline, and we wanted to put together a little piece with some question and answers. A lot of people have been posting things, asking questions, buzz around the office, what's going on with interest rates. You keep hearing on the news they're going up. I mean, I recently heard that somebody got a pre-approval, I think at 5.25 or 5.5, which came out of nowhere, right? Because it seems like everyone's been talking a lot about them going up, and then all of a sudden overnight, they're up. So we wanted to just put together a little session. I'm going to ask him some of the questions I've been hearing, and then he'll give us an overview of what's going on.
Yeah, let's talk a little bit about that. There's been a lot going on. I think it was Dean who posted last night. He said his client was quoted 6%. Dean, that seems a little bit high. We're not quite there yet. Of course, I don't know the ins and outs. It could have been a portfolio loan or some sort of non-warrantable condo. But for your conventional, standard, traditional mortgage, right now we're pricing right around 4.875% on a 30-year fix. So I am seeing a lot of lenders in bigger banks, and this is typically what you see in a rising rate environment. You will see, because they don't want to do mass layoffs, they're really like their businesses are down about 50% because they heavily relied on the refi market.
Right.
And they don't want to lay off their entire staff. So how do they make up for those costs? They increase interest rates a little bit further than the market. So that can be a benefit of working with a broker.
Yeah.
And I think now more than ever, getting a second opinion, maybe getting a couple quotes for your clients is a good thing, because you will see more of a variance in interest rates and pricing. But you talked about it. We've heard for a while experts, economists talk about the Fed is going to increase interest rates half a dozen more times this year. And I think that's an interesting point, because now people think that every time that they do that, interest rates are going to continue to go up immediately. Like as soon as the Fed pushes the button, that interest rates are going to go up. And that's not necessarily true.
That's what I thought. Don't mortgage rates start to go up when they just even start to hint and project at it?
Exactly, because again, we're dealing with a secondary market, we're dealing with investors, we're dealing with real human beings and real money flowing in and out of these bonds. And so people typically react to the speculation, the rumors, not the actual event.
Okay.
So what you're seeing right now is a dramatic increase in interest rates. Yes, a little bit more dramatic than we've seen. I think just a few short months ago in the fall, we were still in the high 2s, low 3s.
So why now?
I can't tell you all the answers there, but I can tell you that yes, the Fed has made their move, and they foreshadowed that they're going to continue to make moves, and the market's just reacting a little bit more aggressively than anticipated. They had predicted we'd be at 4.25, 4.375 by the end of the year. And as you can see, we're at 4.875. We've already surpassed that expectation.
Do you think that's inflation related? Like they're trying to?
I do, and I think it's going to be interesting to see how it plays out. But I do have some numbers. I think if I can share information that's going to be useful and break it down for the agents in the office, like let's see what this actual means. So, start of 2021. Safe to say we were right around 299 on average. Average mortgage on a transaction in the Oakland, Wayne County area is going to be about $300,000, which means a mortgage of $250,000 on average, just for keep it easy. $250,000 principal and interest payment at 299. It's right around $1,037.
No taxes.
That's no taxes and insurance. Just going to keep it principal and interest for the sake of simplicity. Now we fast forward to like January, start of the year. Wow, like boom, already we were at 3.5, and that was a pretty big increase, but you'll see not too big of a impact on the payment. I think we've got, does it say 1105 in my notes there?
Yeah.
So we haven't even gone up $100 from that 0.5% on a 200.
So right on there, like 2021, and then what's this, January?
Yeah, this is January 21. Okay. This is Jan 22, and then this one will be today.
Okay.
At 4.875. It's gonna make your payment roughly $13.23. So, okay, now we're feeling the burn a little bit, right?
Yep.
This person is the person who's been exposed, quoted, and seen those numbers. They've already bought. For the most part. There's not too many buyers. I do have a couple that might have got new construction and they did have a little sticker shock, but I think that's why we want to proactively have these conversations. You don't want somebody you've been showing homes for 6-7 months, which a lot of us have been.
Yes.
And then they have no idea that this is what they're looking at.
So that was going to be my next question. What is your typical pre-approval? How long does it last? 90 days?
90 days.
90 days. So in this market, you're easily looking for a house potentially for 90 days, right? Because you're getting beat out and things like that. So if anybody has a buyer who has a pre-approval from January, what's your advice?
So what we've been doing internally is we've been doing these Friday outbound relationship blocks where we call all our pre-approved clients, starting in like reverse chronological. So we're hitting the most seasoned and we're just bringing them up to speed. Hey, just want to check in. We're getting about to that point where we want to start thinking about renewing your pre-approval. Just want to bring you up to speed on what the current market looks like.
Okay.
I didn't want you to have to find this out from, MSNBC or Fox News, whatever your news outlet is, but
Right.
I wanted to come right to you and kind of let you know what's going on in the market and then just give them a quick education.
So that brings up my next question. Typically and historically, you can't lock a rate in until you have a property address. Is that still the case?
For the most part, we
Okay.
do have a specialty program coming out that we're going to, wrap our arms around, but it's basically going to allow us to lock a pre-approval at pre-approval without a property.
Okay.
And that could be a good selling, good marketing point for somebody
Right.
who's nervous about rates continuing to increase.
Yeah.
Now, the
'cause
good
if
news,
somebody would've done that
it
January.
does seem like rates what they do is they go up, they go down, they bounce around, but then they have like a ceiling and a floor. And when they break through that ceiling, we call that forming a new channel. And then
Okay.
they continue to go up, and then they'll eventually find a new ceiling and a new floor. And right now, from the high of about a week and a half ago, we've actually seen some reprices for the better this week,
Okay.
where rates have started to stabilize and even come back down.
Okay.
So we seem to have found that channel. It doesn't appear, I don't have a crystal ball, so I can't tell you what they will be at the end of the year.
Right.
But I know where we're at right now, and I know that historically speaking, a rate below 5% is still a very, very good opportunity to buy. And in fact, a lot of us are acting like we've never seen this before. It's only been 3 years since we've seen this. So last time rates were this high was 2019 and 18.
Yeah.
Now we haven't seen this type of increase mixed with a scorching hot housing market increase year over year. So that'll be interesting to see how that plays out. But
Any advice on what to tell some of our clients who are getting scared right now?
yeah, I think it's just you got to give them the facts, and you need to we all need to realize this is an emotional transaction. Not many people buy a home for their entire family, an asset that large, strictly off the financials. They're going to prioritize their family needs. School is a big one right now. People are very critical of their school district and wanting to be in the right school district. So a lot of those moves are dictated by things like that, by bigger space for expanding and growing families. Those things are never going to go away. In all interest rates environments, people get married, people get divorced, people have kids, people change jobs, and people send kids to schools. Like those things are always going to occur.
Yeah.
Those are the things you want to find out, how important they are. And then you just give your clients the numbers. And yes, this is going to take some people out of the market. It's also, you'd be surprised with how many people aren't even batting an eye.
Right. And I feel like this is hitting first-time home buyers pretty hard, just because of a percentage of their own income, right? They're not earning as much necessarily. And so some of them are still weighing the option of maybe I'll just rent for another year till prices come down, or, because they're afraid. So what do you say to that?
I think that's an interesting concept too. But I would predict actually that rent prices are going to continue to reach an all-time high.
I would agree.
And that we're going to see inflation in the rental market. And I don't really see, that being a benefit. Like the long-term wealth that somebody can accumulate by becoming a homeowner is always going to outweigh that little bit of risk. But obviously, I think the biggest factor is going to be debt to income. Can they afford the payment comfortably?
Right.
And those are the things that we want to manage expectations. That's what we do. We manage people's expectations.
Right. We need to remain calm, educate, manage expectations, and let them make the decision that's best for them.
I agree.
So if anybody has any specific questions, which I'm sure you guys do, give Brent a call. He's here in the office anytime. I'm sure you're happy to talk to anybody about it.
Absolutely. Absolutely. Stop by, shoot me an email, a text.
We're downstairs now.
Yeah, we've got an office downstairs we just opened up.
Right?
Still going to have some space with you guys here on the floor, so I'm definitely available and ready to be a resource.
Okay. Thanks, everybody.
Thank you.